The worst performing sector by far today, down 4% on escalating U.S.-China trade tensions. For more, let's bring in Amit Daryanani from Evercore ISI. Amit, how do you see this tech sell-off? Is it just vulnerable because it was up so much going in, or are there specific China risks here that are now getting valued into these stocks?
Yeah, I'd say part of it, everyone got fairly complacent with the China risks that were there. The second part is if you look at this $300 billion of tariffs that are coming up, nearly 40% of them are tech products ranging from, smartphones by Apple to PCs by HP and so on. So there is a heavy tech element in the next 10% tariff that comes on, which I think is getting reflected in the volatility you're seeing right now.
Yeah, Apple's in your coverage universe, so advise people what to do right now with one of the most popular and biggest stocks on planet Earth.
Yeah. It seems far away from last week when they actually had a really good print and a lot of the bull case was getting solidified, I would say. If you look at the headline numbers today, 10% tariff on Apple, I think that's a manageable risk between passing it on to their customers, eating some of the costs, sharing with the supply chain. I think that's manageable. The question will be two things. One, does this go to 25% down the road? Or B, is there retaliation in China against Apple? As long as those outlier scenarios do not happen, we think the core of Apple's narrative remains services will accelerate. There's a foundation for a super cycle happening next year that should give this stock a higher high as you go forward. But clearly, there's a lot of concerns with China volatility over here.
Hey, are you worried a little bit? We started the year, Apple traded 142 on a warning about China, and here we are now. Obviously, the forward outlook is clear as mud, and you look at them, they have less than 10% market share in China, and they're still negative year over year. So how do you grow meaningfully the services sector, which a lot of investors are hoping will expand the multiple on Apple, if you don't have unit growth in China and there's a lot of other headwinds there?
Yeah, what I'd say is you're right. The units are not growing, but the install base continues to grow, which essentially means the second-hand market for Apple phones is alive and well. So that's always been the big tailwind for them over here. The challenge becomes, and it kind of goes to your point, which is iPhone units have struggled mightily for the last 3-4 quarters, partially because prices have gone up so much. And so if Apple decides to pass on these increases to customers, do you almost accelerate the down 12% iPhone revenues you saw last quarter? And if you do